What is a guarantee bond? A performance bond is sometimes referred to as a surety bond or contract guarantee. Guarantee bonds are provided by guarantors, an insurance company, to the employer or beneficiary on behalf of the bonded principal or contractor. The bond will guarantee the performance of the contractor under the contract in place between the contractor and beneficiary. This type of bond is often referred to as a performance bond. However, the use of the bond varies as to which bond is issued. Performance bonds are predominantly in place to protect the beneficiary against the insolvency of the contractor and ensure that the contractor fulfills their obligations under the contract. What types of bond are available? There are a number of different types of bond available within the UK construction industry. These include, though are not limited to, performance bonds, advance payment bonds, retention bonds, section bonds, bid bonds, NHBC bonds, and warranty bonds. Section bonds are also known as highways or sewer bonds and are usually in favour of a local authority. How are bonds calculated? Performance bonds are normally 10% of the contract value. Retention bonds are usually between 2.5% and 5% of the contract value. Advance payment bonds are a fixed sum depending on the advance payment value. Bond wording can stipulate that the amount reduces when certain milestones are achieved. For example, upon the issue of the practical completion certificate, the bond amount will reduce by 50%. Bonds are either calculated on a per annum rate or a flat rate. The applicable rate will depend on the financial strength of the bonded principal, the contractor. How can I get a quote? Typically, people will approach a bond specialist, like an insurance broker, who will request information as part of the application. For example, a specialist will ask for the latest unabbreviated accounts, up-to-date management accounts, current forecasts for the financial year, current workload schedule, and a questionnaire completed by your bank. If the beneficiary requires specific bond wording, this should be submitted to Kerry London and/or the surety for review and feedback, since amendments to the wording may be required for it to prove acceptable to the surety. How much does a bond cost? The cost of a performance bond depends on the financial strength of the company applying for the bond. This is because security is provided to the surety via a counter indemnity. The surety will analyse the financial information and provide indicative terms subject to the financial information meeting their underwriting criteria. Another factor that can affect the cost of a bond is the type of wording used. How long does a bond last? The duration of a bond is agreed between beneficiary and contractor prior to the bond being issued. Different bonds are usually in place for different periods. A performance bond will typically be in place for between 1 and 3 years. A retention bond will be in place for between 1 and 2 years. An advance payment bond will typically be in place for 6 months to 2 years. A section bond will typically be in place for 2 years. Bonds will very rarely be issued for periods over 5 years. The expiry of a bond will typically be upon practical completion, 12 months after practical completion, making good defects, or a fixed expiry date. The specific expiry provision will always be included within the bond wording, and Kerry London advises negotiating expiry to be on practical completion or a fixed expiry date. Can a surety bond be cancelled? Unlike a general insurance product, a bond is a legal obligation that cannot be cancelled for any reason other than its specified expiry provision having been achieved. This must be proven via the relevant certificate provided by the beneficiary or its representative, once the contractor has fulfilled the contractual obligations. Bonds with a fixed expiry date will expire upon reaching the specified date. The surety bond will always need to be paid in full before it is issued. What form of wording is typically used in a bond? There are three commonly used types of bond. Conditional requires that damages need to be established and ascertained by an appointed representative before any bond claim is paid. Adjudication is where an independent adjudicator is required to assess and determine the amount of the damages incurred by the beneficiary. On demand agrees that payment will be made immediately without proof of damages being established. Each type of bond has pros and cons for each party involved. A specialist surety broker, Kerry London, will always explain these to our clients to ensure any risks are considered and known. Why do I need a surety bond? It is often stipulated that a performance bond is required under contract terms. This is where people can turn to a specialist surety broker, such as Kerry London, for help and advice. We're here to help. Get more expert advice from our surety team. Call us on 020 7337 4025 or email us at bondsteam@kerrylondon.co.uk. Kerry London, complete reassurance, total support.